Hello, everybody. Welcome back to Money with Mike. Got another video for you. Last time we looked at my last 2 years of trading results, and we kind of went over my general equity curve, what happened, my general over the last 2 years, combined Sortino ratio, Sharpe ratio, stuff like that, to kind of keep things transparent and show you what I was working on. Had a pretty deep drawdown, so that's why I didn't post as much. But I also told you we might go by instrument, so I'm going to come and show this stuff by instrument. I trade micros, but all of these stats are going to be adjusted. They're going to be adjusted so that what you see is what would have done if it was traded on minis rather than micros. The true results you divide by 10 for any dollar amount that you might see. The percentages or any kind of ratios or any kind of that you see are going to be the same no matter what. I'm doing this because, believe it or not, most of the books you read on quant finance, all that other kind of stuff, things from the big traders, things you try to learn from, and they tell you what they shoot for in those stats on things like average trade and stuff like that. Those are going to be with the minis. So it's, if you want to compare apples to apples, it's a lot easier in your head to do that. So they've been adjusted. I traded NQ for NASDAQ, S&P, the Dow, oil, gold, and natural gas. Now, most of my strategies were basically index strategies, ES or NQ, really heavy on it. You saw the big volatility, and it was mainly from that. And that's why my goal going forward from these 2 years is to diversify, soften that curve, do those kinds of things. Let's look at NQ. Oh, wait, nope. Forgot to tell you some more about the strategies. These are all day trading strategies. I am going to go live with my first swing strategy starting next week. I'm developing more swing strategies. I'm going to have a mixture of day trading and swing strategies. I'm going to have a mixture of strategies that trade the regular trading hour session, some that trade overnight, some that trade just 4 or 5 hours a day. Picking those out, trying to find different edges and patterns based on what date in the day you give. But as of right now, for this all history, it was all day trading strategies. And as you guys might have noticed, especially for indexes, 2025 and the last part of 2024, they were rough when it came to day trading strategies, and my equity curve definitely showed it. I'm back at near all-time highs, and we'll kind of see what that goes. But I would recommend diversifying instruments and definitely getting into swing. I was shy about it because when you do swing, you got to have that full initial margin. It can be really rough on a portfolio, especially as you're starting out and getting your trading capital together. I've been profitable, and I've put more in over time, and now I can handle that. We don't know how many swing strategies I can handle, and I probably won't do one for like NASDAQ or like a micro Bitcoin where the initial margin is huge. Probably do things like swing gold, swing oil, things like that. I do believe swing gold is the first swing strategy that's going live next week, and then swing oil and things like that. All right. For NQ, I had 271 trades. My average win wasn't bad. My average trade was abysmal because I was trading so many different strategies, and we had that tough time. The one strategy that I kept is a great strategy, but you never know how they're going to go in the live markets. And the moment I started it, it went down and hit its historical drawdown, made a new one, and came back up. You run your Monte Carlo simulations, you run everything. You don't know if it's going to happen. It happened. I am proud of the fact that I traded it, knowing that it could possibly do this kind of drawdown. I did not interfere. I just gritted my teeth, watched it and let it go. And you know what happened? Yes, I lost money a lot there when it went down to the drawdown, but it's now back at all-time highs. The profit from these isn't huge. Why isn't it huge? That drawdown. But it's been a lot better going in the future, and I expect it to continue to do so. On ES, 355 trades. Average wins, okay. I still want to see over $100 on the average trade. Didn't get that. Got about half that, but that is after all trading costs, so I'm still happy with it. I'm working on making it better. Drawdown, that's a reasonable drawdown from a strategy for sure. For the last 2 years, and the profit much better than what I had on NQ. I had much fewer strategies on ES. That starting algorithmic trader ploy of being overweighted indexes, especially overweighted NQ with the volatility, can get you. It got me. Luckily, I had other strategies performing, and I have a profitable equity curve. But when you get into this, that's the temptation, because it can get you those quick wins and that big money. Look, it'll bite you. It bit me. YM, look at that. Failing strategy. I had 33 trades on it. One strategy. Did everything I could. It got through all my robustness testing procedures, survived all that good stuff. I put it into incubation, let it run for several months. It was still doing okay. Put it live, and I lost money. 33 trades on it. It is a failing strategy. There are going to be strategies that do this. That's why you have a portfolio. That's why you check each strategy every month, every quarter, see how it's doing. And you're going to have some stinkers you got to pull out. They won't all work. Dow, for whatever reason, has been hard for me. I can't find strategies that perform well on Dow no matter what I do yet. But I haven't been at it for like 5 years or nothing. I've been at the Dow working on it 4, 5, 6 months easy. One strategy, it did 33 trades, and I've removed that strategy. That strategy, it's not performing to what I like. And that's the thing in my journey I'm still working on, is what rule do I use to get rid of strategies and take them out? Oil, probably my best stats, period, honestly, guys. Oil, even though it had 87 trades, nice win trade, average winning trade. That average trade of 123 is awesome. Look at that return to drawdown, guys. Look at that. Love that. That strategy is working really well. I'm now supplementing it with a swing strategy, and I plan to supplement it with a short strategy as well. This is all long right here. Not every other strategy had all longs. Some of them had shorts. This is all long, these strategies. And I'm going to keep supplementing them to see what we do and see if I can capitalize on, make them all more look like this. Gold, 14 trades. The strategy that I used for gold, it went into a drawdown. It has now since come back out of it. And I have a swing strategy I'm going to add to gold too. As soon as it passes everything, it may have passed. I haven't done my analysis for this last week, but it may have passed already. 14 trades. This ain't enough to have a statistically proven sample. Don't trust any of these. I mean, the average trade on stuff, sure, that's what we have so far, but 14 trades is nothing. Really, 33 trades back there is nothing, but the equity curve just, yeah, it was way more than 2 standard deviations from what I put in sim and put in my development. That one may take out. This one, I'm giving it longer. I do believe that this one may be out of drawdown now, and it certainly is going to be supplemented by more strategies to work on this instrument. Nat gas, again, look at the trades, not many. The strategy I've put in there does not trade frequently anyway, so it's going to be a while before they get significant, but it is doing well in the market. Great average trade, good profit. That drawdown, don't trust that. Nor people be bragging about that. I can't brag about that. There's no bragging about that. It's 4 trades. Who knows what drawdown's really going to look like? So my goal is going forward. I want some more diversity. I want to do more instruments. I want to do grains. I want to maybe get something, one strategy in each of the other indexes. I would love to trade micro gasoline futures, but the volume just isn't there. I like to get a micro Bitcoin strategy. If I can afford the margin, that might be a next year kind of project. But I want to spread those out, get some currencies, get some grains in there, and maybe even get some of the interest rates just to see what that can do for my equity curve and straighten it out, because I've got a profitable equity curve. I've got a bigger stomach for drawdowns than other people, but I need to work on that. I shouldn't always have to deal with that. It can be smoother, and it's a part of the learning and part of my trading journey to get there. The hardest part is getting profitable. I've proven I can make profit over 2 years. Now I need to make it smoother, make it better, and keep improving, and that's what I'm going to do. Some strategies have failed. I need a better process for identifying when they fail and taking them out. Do I ever put them back in? Things like that. When you read the books by the great portfolio managers, they all have a different strategy and when they retire a strategy. And some of them still keep watching it and bring it back in. I don't know which one's going to work for me. So far, everyone that I've tried is either taking strategies out, then they've still made money later, and I wish I hadn't taken them out. Or it's been strategies that things that didn't tell me not to take them out, and I've lost money, and it doesn't take them out yet. But and one or so of those are still in my portfolio because I'm still waiting for a rule to get hit. But I don't have that. I would love to hear from you guys what strategy you use on when to take one out and bring it back in, because, edges come and go. The edge may go away. I've had strategies that worked, didn't work for 3, 4, 5 years, didn't work for the next 10. You don't know, right? We hope they work. Edges degrade, but I'm working on that part of my process. I think I've got it down, how to develop a strategy, how to make sure it's got edge, prepare it to go in the portfolio, combine it with the portfolio, know how much to capitalize it and put it in there. I've got that down. Retiring one, that's tough for me. I'm real good at, you put it in there, you don't interfere, you don't touch it, you don't play with it. That's the opposite of most traders. Most of them can't stop interfering with the bots, stop interrupting the bots. I have trouble on when I'm supposed to, and I'm trying to find those rules. So if you guys have different methods, things that work for you, post them in the comments. Let me know. I'd love to try some, get some ideas. That's the last part of my trading I've got to fix. And then it's just autopilot on the grind, improve that equity curve. I want to possibly run a fund someday. I've got to have a longer track record than my 2 years, and I definitely got to get my stats tighter. With that there, 2025 so far. Average trade's nice so far. Profit's nice. That sharp isn't as nice. I mean, I've been in some drawdown with my day trading strategies. Everybody on indexes, I think, that you talk to has had an issue, but the Sortino is great. Risk adjusted, oh yeah, love it. So I'm back up near new highs. I expect to end the year strong, especially with adding some more strategies. It's gonna be a good end of the year, and I'm gonna keep showing you guys what I do. You can keep me honest, and we'll learn together. Now, Collective 2, part of that quest for the fund is it's been suggested that not just having your own equity curve sometimes is enough. They want to know what it really looks like if you were trading other people's money, other people's capital. Well, I can't do that right now. So I'm developing a strategy. I'm going to put bots in there, but not all my bots. It'll be micros. It'll go on Collective 2. And whether people buy the signals or not is of no consequence to me. I don't expect to make money off of that. Collective 2 even says the people who make the most money don't make a lot. But if I can get it up there, I can improve my stats, have it someone else verified just right there. I can build that track record on top of these 2 years that would be worthy of investors that may be running a fund. And hey, if any of you guys see it or anybody wants to see it and wants to subscribe to it, I'm going to keep the signals pretty cheap. I think the first time I put up is going to be like $35 a month or $30 a month. Because I'm not really expecting to make money off it. I'm trying to build a track record so I know what my trading looks like, so I can show it to others and maybe some point be involved in a fund or something like that. That's the big in the pie dream, right? Don't know if it'll ever happen. Who knows? But it's there. But until then, I'll keep making myself money, keep doing bots, keep helping you guys. You guys will help me, and we'll just make money together. That's what this is about. And I'm probably going to give updates for it in the future. In the next weeks or so, probably next week or so around there, I'll give you my details on what happened in September. May even go over a bot or two I've got in incubation and kind of talk about it. I may do some reaction videos because I'm guessing folks don't want to just see me talking about only my trading and things. But there's going to be a lot of that because, I know what the end goal is. We're all on this journey, and this is about serious algorithmic trading, serious quant trading. So that's what we're going to do. Well, anyway, see you guys next time.